Excellent. Okay, I think we're ready to go. Hi everyone. I'm Liam O'Brien, Commercial Director here at VantagePoint. Really excited to bring you this webinar today, all around preparing for an IPO, and you really going on that IPO journey, which I'm sure will be so relevant to many of you. In order to do that, we've partnered with Zanda and we've Dav Masson on the line here as well. I'm just going to go through who we have with us here today to bring you this webinar. So we want to put a real focus on leveraging real experience around that IPO journey. And to do that, we've partnered with Zanda, as I said, and Dav is here from Zanda, who specialize in placing senior finance professionals in fast growing, ambitious businesses. And Dav brings a wealth of experience from the recruitment industry, and will really be focusing today on bringing that people and teams element to the webinar. We're also really delighted to have a special guest. Anil Sukumaran is here, and he's the Chief Accounting Officer, and he'll be able to bring that real applied experience again of actually going on that IPO journey with some organizations. Then we have Matt Benaron, who's a director at VantagePoint, and he'll be giving us a presentation in the second half of this webinar, and that'll be all around giving you some actionable tips and tricks that you can take away from today and giving you a bit of a plan around that private to public journey and what you need to do from a processes and systems perspective to ensure you're prepared in the right way. So that's who we have here. Just a little bit of housekeeping. There's quite a few of you that have joined the webinar today, so that's fantastic. To make this even more interactive and better, there are a couple of different options for you to engage, and we really encourage you to do so. There's a Q&A button on the bottom of your screen. Please use that. Ask Anil questions, ask Dav questions, pose some questions to Matt as well. And please participate in the polls. One will flash up just after I finish speaking. The structure of today will be the poll will flash up first. Then we're going to do the interview with Anil. So we'll draw on his experience of that private to public journey, and Dav will be interviewing him. That will last for about 20 minutes. You're going to hear some really good insights from an expert. Next, then we'll just go into some Q&A. So you can ask any question you want, either use the chat function or use the Q&A function. And then we'll switch into Matt's presentation. So Matt's presentation will be all around giving you some actionable insights and a bit of a plan around how you prepare from a process and systems perspective to go on that IPO journey. I think that's everything from me. We will switch into a bit of Q&A at the end as well. You will have now seen the poll pop up on your screen. But Dav, I think over to you, and you can kick off and we can get straight into it.
Thanks, Liam. Hi all, and thank you for attending today. As Liam mentioned, I am the co-founder of Zanda. Yeah, we work with high growth technology businesses, helping with the placement of senior finance professionals. So hence, Anil and I have worked together in the past. So just as a kind of a bit of a backdrop on who Anil is, I've worked with Anil in his last kind of couple of businesses at Roivant Sciences, who are a very high growth biotechnology firm, and most recently and currently at Integral Ad Science. Integral went public in the middle part of last year, and Anil was instrumental in leading that process from a people, systems, and process perspective. Previous to Roivant Sciences, Anil's worked at various businesses, industry, and actually trained at EY. So a wealth of expertise and knowledge to draw upon, from everything in terms of IPO, scaling up, what to put in place to ensure your business can grow in the best possible way. So yeah, I'm keen to obviously dive straight into the questions. Anil, first of all, welcome. Thank you for joining us.
Thanks for having me, and really looking forward to this panel and this discussion. So I think it's the markets are where they are in terms of the timing of this presentation. I think is very timely, given where we are with the market. So really looking forward to helping anyone on the phone, on the webinar, really talking through any insights we can share.
Excellent. Well, look, I suppose my first question is, you've been in businesses that have scaled up rapidly, as mentioned, Roivant and now Integral Ad Science, very high growth ad tech firm. Yeah. So what are your kind of 3 points, would you say, that finance professionals should be aware of to ensure scale up is successful from an accounting perspective?
Yeah, I mean, scaling the accounting function for an exit, especially something like an IPO, is very critical to the overall success of the finance org, right, and this process. The things I would consider, again, probably not rocket science to anyone on the call, but I would say from me, going through my experience, I would say invest in people being the first one. And what that really is you need to really identify top talent, people who have the right expertise and the subject matter expertise to the issues on hand that you would face when you're going through an IPO. But it's not just about bringing them in, it's really about nourishing that talent and creating opportunities for them to expand their remit, give them an overall experience through this process so they can have a sense of contribution through the entire process, be it cross-functional teams or involving them in processes outside of sort of the regular close process or financial reporting process. So that's, I would say, number one. Number two is probably technology, taking stock of current technology. I think a lot of times, when you're going through this process, you realize in order to scale, you really need to think about whether you have the tools in your arsenal to really bolster the company's growth and scalability. So really taking a look at that and getting sort of ready to to go public through that process. And then sort of the last piece, but related, is really the investment in process optimizations, improvements. And every time I think that word gets thrown around, we kind of think about, oh, this is probably another $1 million project for process optimization improvement. It doesn't have to be. I think you can start small with things inherent in the monthly close process, inherent in your daily processes that we can either improve or optimize as you go through this process. And having the right people to identify them and really make a change in those processes is going to make the impact, I would say, long term in terms of scalability.
When does preparation for an IPO actually begin, Anil?
Yeah, I mean, this is kind of going back to kind of a very strategic conversation, right? So a lot of times the strategic discussions happen around exits, possible exit times and what that looks like. And when you think about that as a concept, there's sort of a multi-track approach. Typically, it could be a strategic sale, it could be an M&A opportunity, it could be a financial investor getting another financial investor like a PE or venture-backed firm, or it could, sort of be an IPO. All of these approaches for an accounting finance perspective have sort of the same connotation or sort of implication, is basically you sort of have to prepare in a way that is somewhat similar across any of those exit scenarios. Obviously, the IPO being a little more compliance heavy, so you'd have to do a little more. But in general, I would say 12 to 24 months is any kind of a time frame to start having these conversations and really preparing for a potential exit of some sort in the near future.
And you mentioned in your first response, obviously, the people element is very important when it comes to scaling up and therefore an IPO process. How do you best prepare your team for that, I suppose, IPO process?
Yeah, it's such a good question, Dev. I mean, it's very, very critical when you go through this process. And there's multiple levels of preparation. So I'll kind of walk through a few that in my mind I think are really important. One is, I'll call it the blocking and tackling, right? So first is, what needs to get filed when, who needs to do what periods are under audit, kind of how do we get from point A where we are today to point B, which is the IPO filing? Like, how do we get from here to there, and what needs to get done from a compliance standpoint? So that's one, and that is, I would say, important but relatively easy enough to map out, right? So that is one really important preparation aspect of it. But the second aspect of this is really, I'll call the dry run aspect of it, which is a lot of times when you're doing this, you're not just doing this because you want to take the company public and forget about it. You're really trying to do is really build an organization that can sustain being a public company and report its numbers and be accurate and all of that goes with a public company. So how are you going to do these dry runs, whether that's a more efficient close, whether that's a more timely close, whether that's looking at complicated areas in accounting on a monthly and quarterly basis, as opposed to what companies have historically done on an annual basis? How do you do that, call it dry run, at that same level, public level cadence that you have while you're still preparing for an IPO, right? Sort of there's two elements of preparation there. One is just to get the job done, but then the teams need to focus and start thinking about what they need to do better and do it very relatively quickly and have some repetitions before they go public. And then two other things I would point out. One is ad hoc requests, right? We can train our teams as much as you want. You can create the best project plan. You can create the best checklist in the world, but we're going to see surprises no matter what. We're going to get diligence requests. You're going to get underwriting requests. You're going to get requests from lawyers, just things that you've not anticipated that have a time crunch to it, and in essence, that's sort of an urgency to it. So having the teams be prepared for that. And then sort of the last thing is, and this is the part that I'd like to stress on a lot initially with the teams, is we have a timeline and we're sort of working towards the timeline. But like everything else, market timing, investor dynamics, reception in the market, there's so many factors outside of our control that could move the timeline, right? It could either accelerate it or it could move it. And a lot of times the teams get very disheartened, right? They're rushing to the finish line. They're really charging for a potential deadline, and sometimes they get moved. And when it gets moved, it's really having those conversations up front where we talk about the continuous moving target and what our role in finance and accounting is, to really just get back into it and start, kind of doing it all again for another quarter, maybe 2 quarters before we get through the final thing. Sort of educating them up front, I think helps with this process. Otherwise, you'll see a lot of very disheartened, disappointed team members when they thought, there was a certain deadline in sight,
Yeah, great. And that was on nicely to the next question. What traits, I suppose, and skills should you be looking for when hiring, pre-IPO?
Yeah, I think, for a public company, because of how demanding it is and sort of the challenges associated with it, I would say clearly people who incredibly high caliber, high growth, high potential people would be nice to have in this environment, especially people who are looking to work collaboratively across the organization. This is a very collaborative process. It spans across all functional areas in the organization. I really like people who like to raise their hand sort of attitude, because there are plenty of opportunities where there's so much going on that it might not be exactly in your wheelhouse or in your responsibilities, but someone who can raise their hand to say, I see the other person drowning in their own, sort of work stream. I'm happy to help out and what I can do to help support the team. So a combination of some of those, kind of attributes, I think would be really important.
Yeah, I think it's sometimes a kind of an overused term, but hands-on and flexible and adaptable, it seems, are some of the key traits.
Yeah, absolutely. Sure, nimble, nimble in their approach. Very, very. You need to have competing priorities, like all of those things. I think very important.
Yeah, and I'm sure there's kind of multiple answers to this, but what would you say is the most important factor to consider to ensure that you do have a successful IPO?
Yeah, I mean, when you think about the IPO itself, I think the IPO is sort of a really important milestone for a company, but it sort of is also a process where you can take a step back and think about this as a fairly transformational process for the accounting finance org, because it's not simply a financing event. This is really setting the stage for you to continue to become for you to be a public company, and then for you to continue to establish being a public company. So difficult, as you said, to pinpoint to one or two things, but I would say in general, discipline and rigor are probably the most important attributes to get you to, kind of start to finish and to be successful overall in sort of any kind of offering.
And what would you say will be the kind of biggest demand on the accounting function, pre-IPO?
Yeah, I mean, this is kind of where, I mean, it's a good point, because this is where I think people, don't have a full appreciation of the process, right? Because there is a significant work stream with the IPO process in and of itself, but there is, and a lot of times people misunderstand that to be, you can bring in supplemental resources to help build, on some of the gaps in the organization. And you certainly can do that, and there is no question about it. And that helps a lot. But a lot of times what happens is the people in accounting finance have the history of the company, have the knowledge of the transactions, understand what is in the general ledger and why it was booked a certain way. And in terms of adding to what they already have in terms of demands, you can bring all of these advisors and service providers, but they still need to work with the people who have the knowledge of this company. So I often find that is a very underappreciated part of the process, because people just assume if we hire the right service providers, they'll be able to come and get you public. But the team is actually shielding a lot of the work that helps that service provider on a daily basis, because they need to be educated about the history and the transactions and so forth. So I do think, because of their reliance on management and the accounting team overall to get them through this process, I do think that is sort of one of the reasons why I think it's still, a fairly significant lift for the internal teams.
Yeah, and I'm assuming, never been through it myself, but from what it sounds like, it's obviously a very stressful and very demanding position to be in when you're leading that process. So who did you lean on for guidance, through the, I suppose, multiple processes that you've been through?
Yeah, I mean, I think it's really, really important to kind of surround yourself with good advisors. Overall, I mean, many of the companies are PE-backed companies, and so obviously, if they're part of a portfolio, and if there are other companies in the portfolio that have already done that, I would, absolutely, from my experience, I could say we've done that, and certainly, but I encourage others to do it, because you learn a lot about the pitfalls that they went through, the gotchas, and where they thought, reflecting back, that they could have done better. So I think that certainly helps. But having a good network, be it CAOs, CFOs, finance professionals, auditors, all of that, I think, is really helpful in helping you just kind of get through the process and be able to lean on guidance in various aspects.
Yeah, and we've obviously touched upon the people side quite a bit, but from a kind of process and controls angle, I know that Matt will discuss this in greater depth, but what needs to be in place, or what needs to be really refined to ensure you can steer the ship in the best possible way through that IPO?
Yeah, and like, as you kind of noted, I mean, I think every company is unique, sort of has their own set of challenges. Some companies are really strong in certain aspects, others have, gaps that they need to fill. But if I were to kind of use a general lens to answer this question, I would say, in general, companies need to think about how you strengthen the process and controls around the monthly close process, for instance. What is your process of reviewing complicated accounting transactions, and what is your process for validating data inputs and data quality? I mean, these are all basic things, but really process-driven challenges that companies, both public and private, deal with on a daily basis. And then the part that I want to highlight here, and somewhat underappreciated, is a lot of the private companies, I mean, as you can imagine, have gone through audits, annual audits. They've done, their tax provisions on an annual basis. They've had the benefit of actually filing a tax return or what have you. But when you start thinking about moving from that to a public company mindset, you need to start thinking about quarterly tax provisions and how you would need to liaise with your friends in FP&A and start thinking about forecasting and things like that to actually end up to come up with a tax provision. Very, very underappreciated, again, as part of this process, the amount of cross-functional dynamics that need to be in order to build some of that. So from a process standpoint, I would say that's really critical that companies focus early on the tax provisioning aspect of it, so they're not caught off guard or left surprised at the end once they go through this process.
Excellent. And you obviously went through one quite recently with Integral Ad Science. How easy a process was that then? And any particular learns, or maybe you don't want to admit it, but any particular learns from this one in particular, and ones that you've done previously, that possibly that you would have done differently, or things that you could have kind of picked up on sooner?
Yeah, I think I agree. I think every process is a little different. You learn a lot from each process, and you kind of go through it. The part that I would say, maybe two areas that sort of come to mind from a learning perspective. everyone is moving at real speed, whether that's accounting, finance functions, and whether that's the FP&A team on the deal model and the like. I think in sort of my experience, it is obviously really good to have both those teams talk and coordinate on a periodic basis, given the speed at which things are moving. Sometimes that might not be the case. And sometimes things could fall through the cracks, right? So if you have a new accounting pronouncement that affects the recognition of revenue or the way you account for leases, let's say, on a go-forward basis, and if it's not adequately communicated to the FP&A team, they are building out 2 to 3 year deal models, right? And if we're not in sync with the impact of these new things, these new accounting pronouncements on the deal model, then you're sort of going to be caught off guard. So I'd say, having, thinking about, when you think about learning opportunities, I would say really be close to the FP&A team, really thinking about the impacts on a future deal model, especially since these models go out to the bankers. And then on a secondary sort of note, I would say, in line with the overall audit risk, I would say, really evaluate the controller environment around your enterprise systems. Having the right person in-house or advisor as needed to evaluate the controller environment in the IT general controls. A lot of times that gets picked up towards the end, and then it changes the level of audit work that's required, and it sort of creates additional work. So I would say, maybe at least from my experience, I would say maybe picking out those two, probably the ones I would say are things I could have probably done differently or better.
Excellent. And IAS obviously are in the new world of having gone public. How have you adapted to that, and how have your team adapted to that specifically?
I mean, it's we've been about two quarters in post public. We just recently reported our annual results. So yeah, things are good. There's plenty of opportunities still to improve as a team, as any team does. This is a process that takes, I would say, at least 12 to 18 months post IPO to really get sort of the discipline down. And especially for companies that are moving, as you know, that very quickly and really scaling quickly, it becomes there's only so much you could do in a short period of time, and then you need to let the teams handle some of the longer term goals, maybe in the later half of next year, so to speak. So yeah, so things are going well so far. I mean, it's incredible what we've been able to do as any team, as I assume a lot of the teams on the calls may have already done.
Excellent. Anil, what a great insight. Thank you for your time. I think what we have is a few questions that Liam will take over and pose to yourself, Anil. So yeah, thank you for your time.
No, thanks, Dev. Thanks for arranging this.
Yeah, absolutely. Thanks, Anil. That's been really brilliant. We've had a lot of really good questions as well. But I will start with this one because I think this will be, a bit more of a detailed answer from yourself. So, thanks. The question goes, thanks for the brilliant info, Anil. Question, we're seeing a lot of newly IPO'd tech shares getting slammed after quarterly reporting numbers that slightly missed or even beating numbers, but guiding slightly lower than expected. Is there anything that the company can do to prepare properly pre-IPO for the extra eyes that come post-IPO?
Yeah, that's an excellent question. I think the current market dynamics might be a little different and has a lot to play into what we're seeing today. But I will probably respond with a more normalized market dynamics. I don't know if I wouldn't say this is abnormal, but we're certainly seeing the levels of market volatility today that we haven't seen in years, decades maybe. So what we need to do, to your point, to the question is, what can we do? I think the deal model, I sort of touched upon this before, the precision in the deal model pre-IPO to post-IPO, I think needs to be very closely monitored. A lot of times FP&A teams themselves are staffing up, ramping up, just much like the accounting finance teams. And there is a certain level of understanding of the business. There is a certain level of understanding of the judgments involved in that business the seasonality that happens with the business, the way certain customers behave in certain seasonal or other trends, all of those things kind of lead to, I'll say, a very informed forecast for the company or estimate for the company. And therefore, not having a person maybe in that role for too long, or having a bunch of newer people in the role, or newer team members, could disrupt some of that ability to forecast, right, in a very accurate manner. And that could result in both pre and post IPO, misses. And pre IPO, obviously, we're trying to scale, we're trying to get the cadence right, we're trying to stick in a very narrow margin of what the street expects the earnings to be. Post IPO, I just think it's going to be continuous rigor. Just like any accounting function, I think everything has a process that needs to be reviewed very, very closely to see where the dependencies are, and really analyze those to see if those dependencies don't work the way you've estimated it. What is the impact? So really good question, really tough market to do it, but I'd say it really depends on the discipline, in the company to forecast numbers accurately going forward.
Absolutely. So just one more, and then I can see there's some more popping up now. And I really, really appreciate it. We will need to leave those until the end. But just one more, which hopefully will be a bit of a more simple one, is what are your kind of top tips for getting people on board ahead of that kind of IPO preparation period? Because as you rightly highlighted, it does get so busy, and we see that across so many of our clients here at VantagePoint. Balancing BAU along with all of this preparation can get really crazy. What are your kind of tips or guidance around getting people on board and getting them set up for this really busy period that's ahead of them?
Yeah, I mean, one is, certainly you need to incentivize some of this, right? It is a extreme, as you know, Liam, and your firm, and Dev knows from the clients he's brought, I mean, the recruiters we work with. It's an extremely busy period. You really need to motivate them, understand that this is over and above any day job, and really need to kind of recognize that up front, and really potentially put in some incentive packages to motivate the teams and the behaviors going forward, right? So that I do think is important, and every company should really think about what that looks like, so that you have the right incentive or the motivation to get those results you need. But secondarily, I think it is really important for us to give people a holistic view about what this brings to the table from a moment of realizing value for the company and what that means for them. A lot of these individuals are also stakeholders in the company or owners of the company. They either have options or grants, pre-IPO or post-IPO, that they would vest. So what is it to be an owner? And that should be a good realization moment. A lot of times, some of that is good, bringing the right people with the right mindset to really, drive shareholder value, which is really what this is, right? What the IPO event is nothing but driving shareholder value. And what do we need to do in finance to really uphold that part of, driving value?
Fantastic. So really incentivizing those good behaviors that you want to see during that busy period, and also ensuring that people are completely bought in, so they stick with you throughout that journey.
Yeah, absolutely.
Fantastic. Thank you. I think there's some really good advice for everyone in there, and I really, really appreciate that. Thanks very much for the questions. We will get back to those at the end. I can see the box is starting to fill up again. And Anna, we will come back to you, but really, really appreciate that. That was fantastic.
No, absolutely. I'm going to be around, so feel free.
Excellent. So now we'll just switch into something slightly different, and we'll hand over to Matt, and he's going to walk you through a lot of the work that we do with a broad spectrum of our clients as they prepare to go on that private to public journey, and how we kind of increase their readiness and hit on a lot of the points that Anil mentioned there. And hopefully you'll all be able to take away some tips and tricks from this presentation, and we'll also share this after the webinar as well. So Matt, over to you.
Yeah, perfect. Thanks, Liam. And given some of the questions coming in, I will try to wrap this all up within 20 minutes. So we've got 10 minutes at the end for some questions. But just by way of really brief introductions, my name is Matt. I'm part of the VantagePoint team, and we support organizations in lots of different ways, helping organizations get ready for IPOs, both from a process, people and systems perspective, but also helping organizations sometimes post IPO And really my objective over the next 15 to 20 minutes is to give you some of the common pitfalls, thinking about what are the main considerations for you to take into your IPO journey. I'll also talk about other liquidity events that might not just be IPOs, but I think a lot of the things that we talk about in that IPO journey are equally as applicable. And then at the end, I'll try and give you a couple of really tangible takeaways, things that you can take away from the call today and start to think about, start to do, start to action to try and make this as relevant and applicable to you as possible. And please keep questions coming through the chats, and if there are any at the end, I'll dive into those. So starting off with common pitfalls, and we work with organizations approaching and heading towards that IPO event, but we do also work with organizations maybe that have been through that event and have those lessons learned, and maybe have stumbled across some of these pitfalls. And the best way I think to articulate these is some of the things that our clients say. We're focused on growth, and often growth of the organization, growth of revenue, growth of the product, the core service is the primary focus, and quite rightly it's the core focus. But what that can often mean is that there's just close to zero focus on the infrastructure of the organization, and particularly in focus today on the finance function. So it's getting that balance of focusing on the core objective of the business whilst making sure that the support functions in the form of finance are also given the right amount of focus as well. We often see organizations that look at solutions as a bit of a stopgap. We've got a burning platform here. We bought that general ledger solution just because we needed it then and there to achieve what we needed to do then and there. As we go through, I'll talk a little bit about that step back, more holistic approach to investing in solutions. So avoiding that stopgap style investment decision making. And that goes hand in hand with it'll do for now. A big theme and a big kind of area of advice for any organization going through high growth generally is to think 12, 18, 24 at least months ahead, and actually make investments with that in mind. Behave as the organization you want to be and you're working towards being, as opposed to the organization that you might look and feel like today. We touched on the human side of the IPO process. It is really time consuming and it can be challenging on all of the individuals, and sometimes it's easier to take on we're just getting on with it. We've got so much to do through our monthly close. We've got so much to do in addition to our BAU. At the moment, we're just getting on with it, and it's easy to get caught in that trap. And it's often feedback that we get from clients. We're just too busy to really think beyond the day-to-day at the moment. Classic is we work with lots of organizations post IPO who are still running a big manual Excel estate, a sea of spreadsheets. And again, that works and it's easy and it's the quick fix, but starting to think a little bit wider is often really valuable. And finally, we didn't really anticipate this. Often from organizations that have maybe been through the journey and haven't matured from a finance perspective, say, we didn't really anticipate this being this much of a problem. And today I want to focus in on kind of some of the forward-looking elements for you to think about to make sure that you can anticipate some of the challenges that you might come across as you start out on your journey. So these are some of the common pitfalls. These are the things that some of the clients we speak to are saying. And from here, I want to pivot into, well, how do we get finance set up in the right way to maximize on the opportunity? Because it is an opportunity to avoid these common pitfalls and challenges that leads to, such as big technical debt, solutions there that aren't bringing the maximum value, not being able to drive insight. Retention risks. The chats before were talking a little bit about about people and keeping people is essential. And audit is a really tangible area where there is massive opportunity for cost saving. So how do we avoid these pitfalls, avoid the results of those pitfalls, and start to really strategically position finance? So starting off with that strategic positioning of finance, it always helps to step back really wide and think about how you're going to maximize the value that finance brings. So it changes from that support function I was talking about earlier and starts to pivot into a key pillar of the organization driving value. And the first thing to do is to think about the perception of finance. Often finance isn't perceived in that really value add way. Thinking about how is finance perceived and how might we change that is always step number one. A really easy and tangible way of driving value is thinking about insight. It can be backwards looking. It doesn't need to even be forwards looking for now, but ensuring that you're making that financial and often non-financial data available to the right people at the right time in the right way with speed and agility is a really easy and maybe quite obvious way of starting to pivot into being that value add finance function. Then starting to look forward. So as you become listed, and there was the question earlier about the shares being slammed, I think was the term used, and that accurate forecasting, accurate budgeting is absolutely essential, and your focus will need to, if it's not already, shift to constant focus on forecasting and reforecasting and improving that process to improve accuracy over time. And it's interesting that we're both talking about team retention. It's often something that's thought of as a bit of an afterthought, but without really, really strong retention in your finance organization, there will inevitably be challenges. So much of the success of going through a big project like an IPO is making sure you've got the right people with the right knowledge at the right time, because they will be the glue in between everything else. So there's some of the wider, bigger themes, but let's hone in a little bit further and focus in on what are the key things to consider when you're heading towards an IPO. What's going to change? What would be your kind of sub pillars of focus underneath that strategic headline? And some of the things on the screen will hopefully be familiar and things you're probably doing already today. So reporting, you'll already be reporting, but there'll be extra focus. There'll be more stakeholders. There'll be more eyes. Again, I think that was a comment earlier. There'll be more eyes on your financials. So what does that mean? How are we delivering reporting? What is the timeliness of that reporting? Audit requirements naturally grow as you become a public organization. So thinking about just the general auditability and control frameworks that you've got across finance become much, much more important. So that might be an area to invest and develop upon as you head towards that. And then other areas such as system readiness, part of that might be for things like, if you're listing in the US, additional SEC reporting that you'll need to do. So making sure that all of your systems and processes are set up to at least meet all of the basic obligations that you've got, but constantly thinking about that access to insight, that value add, that forward-looking planning. And this list isn't exhaustive. This isn't everything you need to think about, but it starts to give you some areas of focus to start to maybe take a bit of a checkpoint with yourself and say, where do I feel like we're at as an organization in these areas, and what steps can we take to improve? And through doing so, some of the really tangible outputs that you should be able to drive is a decrease in audit spend. A lot of our clients, a lot of our public clients spend phenomenal amounts on audit. In fact, one of our clients spent the best part of 11 months getting their annual report out in 2021. And that's really driven, it's put a magnifying glass on their reporting processes. So if it doesn't happen at the point of IPO, shortly afterwards, the wheels will start to fall off if you haven't invested in these areas. And ultimately, we need to drive, as a public organization, shareholder transparency, and all of the above is there to support with that shareholder wealth, shareholder transparency principle that we're all working towards. So we've spoken about those bigger strategic themes in positioning finance in the right way. We've now looked at some of the sub areas of what are those key core IPO considerations. But how do you start to go about actually taking check and looking at where you're at today? When we work with our clients, we leverage what we call a capability model, but this is something you can really take away and do yourself. You don't need to work with a third party to do it. It can help, but you don't need to. And when we look at organizations and say, right, where are you at today versus where do we need to go? We use a capability model like this, focusing across, in this case, systems, process, and people. Core pillars for you to think about. And then in each of those areas, you can break that down into core capabilities, core skills, core systems, core processes that you know underpin your finance function and will determine your efficiency and success in the future. And then using a quick scaling, here we've got just, this is a visual design to really bring people on the journey, but we'd encourage you to do the analysis underneath this and say, well, let's take a look at our ERP, for example. How ready is it for the growth journey we're going on? We're becoming an international business. Does it have the capability to support that? The team's going to grow in this way. Will it have the ability to support those new stakeholders for reporting? So each of these explodes out even further. And ultimately, you can come up with some form of RAG rating at the end to say, are we where we want to be? Is there room for improvement? Or is this maybe a critical area of focus for us? And I'll dive into the areas for process and for people as well, because and again, I stress these are just examples. This doesn't have to be exactly how you map it out. This is an example of how we present this capability assessment back to a executive team to help them really understand. We've gone away, we've done a review, we know we need to transform and improve over the next 12 months. This is how we're going to do it. This is the before and this is the afterwards. So a lot of this is not just about taking check and understanding where you're at, but it's also about thinking about your peers and stakeholders and bringing them along the journey with you. So hopefully this is one tangible item you can take away. In the final section, for the final 5 minutes, just wanted to share a few key recommendations, other areas you can focus on and action as you head towards your IPO. Now, the first item is to take that step back and think about building a finance strategy and a roadmap. So that leads on from the last point. You do your capability assessment, say, right, this is where we're at today. This is what we're doing really well, all good. These are the areas we need to develop and improve. And inevitably, there's going to be some investment needed along the way. That could be people investment, process investment. It could be consultant investment. It could be technology investment. And if you're going to be seeking investment, it's always good to have that broader strategy and plan. So what does that mean? Where is finance going over the next 3 years? Not just where's the organization going, but what does that mean for finance? And how can we break that into actionable steps along a roadmap to really bring to life the value we want to bring? And how do we justify what could be significant investment going in along the way? And just to bring that to life, to give you some examples, we work with organizations with an assessment framework. We make observations, kind of doing surveys, reviews, interviews to understand what the world looks like today, perform that maturity assessment that I showed you before, think about what it might want to be in the future, speaking to as many people across finance and beyond as possible, thinking about systems and target architecture, coming up with changes we want to employ. That might be new systems, it might be hiring individuals and prioritizing those. Show that you are not just saying we need everything, we need it all now, and it's all going to be really expensive. looking at quick wins versus some of those more strategic investments is important. And then starting to build business cases, continuously linking it back to your overall finance strategy. So I leave you with some of those artifacts because it hopefully gives you a bit of an idea that you can perform that exercise yourself of building that strategy and roadmap, and then pulling it together in a way that brings the whole organization along the journey of understanding why finance is so key, why investing in finance is really important, and how it's going to ultimately act as a strategic asset for the wider organization. So that's recommendation number one: build that strategy, build that roadmap, bring everyone along on the journey with you. The other key recommendation we'd make is ensure that as you do inevitably start to invest in solutions, make sure you're thinking strategically. It might be that the burning platform today is FP&A, or it might be reporting, business intelligence, but think about not just the 6-month horizon, think about that longer term horizon of change to make sure that you're making the right investment decisions when it comes to the technology. And we believe at VantagePoint that most organizations going through an IPO process or heading towards the IPO should have 3 core technologies that underpin their finance function. Now, this is a potential simplification. It's not saying that every organization should only have 3 solutions, but if you take this theme, it gives you at least a bit of a baseline starting point to move from. So we believe that organizations can have 3 strategic technologies to underpin finance. If you've got more, is there an opportunity to potentially rationalize? And the key areas would be having an ERP that will help you scale. So keeping it lean, making sure you've got a robust core finance system that supports you today, but will also support you 5 years from today as well. Changing an ERP later down the line is much more expensive than getting it right first time around. Then thinking around the modeling FP&A side. So what does reporting need to, I'll come on to reporting, but how am I going to budget and forecast? There's always going to be calculation models, consolidation, offline adjustments. I think earlier we were talking about understanding things like impacts of leases. So lease accounting is a complexity. How are you going to model adjustments, form, forecast, all the things that traditionally would be done in Excel? What is a solution that could underpin that for your organization? And finally, reporting. You're going to need to be providing reporting, whether that be BI dashboards, whether it be annual reports that become more important post going public. It might be internal management reporting. Think about how you're serving your broader, more diverse range of customers that you inevitably have as you become a listed organization. But consolidate solutions, implement strategically, and make sure you've not got a sea of solutions that are then going to form that technical debt I was talking about earlier. So that's around the system side of thing. And then finally, think about investing in technology to support your IPO process. And this is a trick that I see a lot of organizations actually miss out on. Everyone has a rough plan, everyone's implementing solutions, maybe not always amazingly, but they hit 1 and 2 in some shape or form. 3 is one I think is often missed, which is as you go through your IPO journey and the IPO readiness and all of the logistics towards an IPO, and it could be an IPO, and I've given examples of other events, but there are loads of filings and returns that need to happen. You've got a huge number of stakeholders to pull together, some of which will be internal, some of which will be external, and it will inevitably be across different organizations as well, from accounting advisory firms through to legal, through to IPO advisory, through to your PE firm today. It's just a few examples, and that brings challenges in itself. So sharing documents around, loads of versions of documents, time spent reconciling data going into those core filings that you need to produce. we see clients with huge expenses for legal fees going through the IPO process. A massive amount comes from the time spent on not hugely value-add tasks. So if that sounds familiar, or if that's a concern you've maybe got, which if you're going on that IPO journey, it probably will be, think about a solution that helps you with all of those areas. And there are a number out there that will support you with documentation management, bringing that collaboration into a single place, integrating different filings and returns and reports, disclosures you need to produce together, auto validating those submissions. We see organizations making the right decision, investing in solutions like this, making a massive difference to some of the external costs that you've got between today and that IPO event. And often the platforms that will support you with everything you see here are great strategic platforms for you to grow with as an organization, as all of the benefits you see here not only support with the IPO process itself, but life beyond an IPO as a public listed organization too. So in summary, think about that strategic roadmap. Make sure you're making strategic solution investment decisions. And also think about the technology that can support you with the logistics of your IPO process. And I'll pause there. Really keen to dive into any questions. I know there were some questions for Anil, also that we'll dive back to. We'll share these slides with you afterwards. So you've got examples of those artifacts and things that hopefully you can take away, act on, reflect, and then employ as you go on your own individual IPO journeys. Thank you very much for listening, and I'm really keen to dive into any questions.
Fantastic, thank you. We might not get through them all. We have about 6 minutes, so we're going to try and get through them as quickly as possible. Maybe the first one, and Anil, this might be to you, and maybe Matt, you can share some experience as well, given that you see so many people go through this process we work with in this role. Someone's just asking, this seems, like a very kind of scary, big, arduous process. Is it worth taking on that kind of FD role at a company that's about to go and do an IPO, given that it looks like a very intense process? So this is just coming from someone, I think, that's considering the kind of merits of joining an organization that's about to go on that, what is quite long and intense IPO journey, and basically saying from a career move standpoint, is it worth jumping into that, or is it more of a headache than it's worth, I think is the way he phrases it here.
Yeah, and I'm certainly, willing to take Dav's insight into it as well. But I would think there's not too many opportunities that people get in accounting finance to be part of an IPO process. I do think it is, in general, a career enhancing move. Going through the process gives you a tremendous amount of visibility, not just within the accounting finance org, but across the org. And it just depends on what you're looking for, but I wouldn't miss it for anything.
Fantastic. Yeah, I think that's a really, really good answer. Dav, anything from you on that one?
No, I think, generally speaking, I think the exposure that you get across the piece is pretty broad. And it's obviously quite a fast-paced environment, which a lot of candidates that we present enjoy, and that's in a high-growth business. I think it's an easy sell to potential candidates to not only just be exposed, therefore, to the accounting function, but a number of different operations across the organisation, which for sure helps to really elevate the learning experience and fast track that learning experience. What you can learn in a high growth business in 6 months is probably what you would learn in a pretty static business over maybe a few years. So yeah, I think the exposure and learning curve for an accounting professional and professionals in general within that high growth environment and so on is pretty invaluable.
Fantastic. Great. I think just to switch slightly more into the kind of process and systems type questions, there are a lot in the Q&A box, and Anna, I know you put it in the chat box as well, around kind of when is a good time to look at that transition away from kind of that Excel and maybe very basic general ledger world, something like a Xero or something like that. We see a lot of fast growing, ambitious organizations that are kind of heading for IPO in the next 2 years that come to us on, old versions of Sage, or maybe something like a Xero or something really basic like that. And they're considering and weighing up the benefit to risk analysis of going to an ERP or something that's a bit more enterprise. Maybe, Matt, I'd put that question to you. How do you maximize the benefit of that more enterprise style ERP system, which really likely are going to need as a public company, or at least heading towards a public company? How do you weigh that up between kind of staying what you are, which might be a legacy system or something of that nature, and then also kind of, looking at the risks of doing what sometimes can be quite a difficult ERP transition? How do you kind of balance that?
So I think the first part of it is, what is the level of ambition of the organization? Is the IPO or event 100% certain? Is it definitely going to happen, or is it we might grow, we might be ambitious? And yeah, I suspect for most organizations it's yes, we're definitely going on this path. There's some uncertainty, but we're definitely heading on that journey. And I think therefore most organizations that have that much being certain, that growth is certain, new markets, increased revenue, IPO, possibly, probably. The answer is quite simple, which is the earlier, the better. It is much cheaper to implement a solution when you're smaller and less complex and have it grow with you than migrate something at a later point in time, or have to unpick and change. And that goes for systems, it goes for processes too. It goes for an ERP, and it goes for everything else. Some people struggle with the mentality of maybe we feel like we're investing above our weight or doing some things a bit too early. But certainly if it was my finance function, I'd get them on the best solutions as early as possible, so it's ingrained throughout everything we do. And then it will certainly in the long term, and the long term is most, it will, in the long term, it will decrease cost, and probably dramatically.
Absolutely. And I think one really interesting point we've touched on, which is when you're heading for an IPO, you're heading for a really significant event like this, losing people along the way can, be really, really affect the organization really badly. And one thing we do see, an underinvestment in technology also has a massive impact on retention. And, people don't want to be doing that kind of old-fashioned manual based work, and I think that really can have an impact on their ability to enjoy their jobs. So I think thinking about that technology early, not only is it cheaper in the long run as well, it tends to lead to a more solid team who are enjoying their work, happy to be there, and seen as kind of value drivers in the organization.
Agreed.
We would like to end on time, so unfortunately we are all out of time for today. Really appreciate everyone who's taken the time to come along today. And thank you so much to everyone who's provided content. A special thank you to Anil for joining us, and I think adding so much value in terms of his experience. Thank you to Dab and Zanda as well for partnering with us on this event. You will receive some follow-ups from us with just some content pieces that are going to be value adds. You'll receive the slides, and you're also going to receive the recording from us too. So really, really appreciate you all joining. Enjoy the rest of your day, and we look forward to hearing from you all soon.
Thanks, everyone.